Penguin wants to start a fish business. Big dream, small wallet. And before you ask, no, robbing a seal bank is not an option, so Penguin has an idea. He waddles up to a few rich polar bears and says, "Hey, lend me some fish so I can build a business." In return, he offers them a tiny piece of the fish company. That little piece is called a stock. Buying Penguin's stock makes those polar bears partial owners of the fish company. They share the risks and the rewards. When the business does well and earns more fish, Penguin gives the investors a portion of the profit. Those rewards are called dividends. Basically, rich polar bears get paid in fish for doing nothing. Now, Penguin keeps hearing two words, stocks and shares. They sound the same. Kind of like snow and ice. But technically, they're a little different. If a stock is the entire fish company, then a share is just one fish from that company. More shares means more ownership. More ownership means more fish on your plate. Not all stocks are equal. Some come from big iceberg companies, stable, slow-growing, reliable. Penguins call those blue-chip stocks. Others come from tiny fish startups that might explode or sink. Those are penny stocks. High risk, high reward. Like fishing in shark water with a broken rod. So where do all these penguins, seals, and bears trade stocks? Welcome to the stock market. A giant frozen ocean where everyone buys and sells ownership in companies. When prices go up, it's called a bull market. When prices fall, it's a bear market. Which is ironic, because penguins really don't like bears. Some penguins don't want to chase every fish individually. So they invest in funds, baskets filled with many fish companies. Like the Penguin 500, a fund made up of 500 of the biggest companies in the icy economy. Lower risk, easier to manage. Perfect for penguins who'd rather nap than trade all day. Then there are hedge funds. Think of them as elite fishing crews using secret nets, maps, and a lot of money. High profit potential, but one wrong current, and they lose it all. Only rich polar bears join that expedition. So why do stock prices rise or fall? Demand, news, greed, fear. If more penguins want Fish Corp stock, the price swims upward. If no one wants it, it sinks faster than a snowball in hot water. Sometimes even a rumor like, Penguin Corp is building a secret robot fisherman can make prices jump overnight. And that is what a stock really is. A little piece of a company you can buy, sell, and hopefully profit from. Remember, investing is like fishing. Patience catches more fish than panic ever will. This video is not financial advice. Penguins cannot legally trade fish or stocks. Yet, please subscribe.